Welcome back to the channel. Jeff Bezos, Elon Musk, Richard Branson, they own private jets, mega yachts, and $100 million mansions, and yet some of them pay less in taxes than you. How is that possible? Today we'll answer that question. We'll look at how some of the richest people in the world legally avoid paying taxes. But first, let's watch this short. Some billionaires pay no taxes at all. So how do they do it? Well, let's start with one simple fact. Most billionaires don't get rich from a salary like you and me. They don't earn most of their money as income. Instead, their wealth is stored in assets, stocks, companies, real estate, art, and other valuables. This is what makes understanding their finances a little tricky. Let's look at an example. Jeff Bezos, the founder of Amazon, has a net worth of around $150 billion. Now, a big chunk of that comes from his shares in Amazon. As of May 2022, he owned about 54 million Amazon shares. At Amazon's current price, that's around $100 billion, but he doesn't actually hold that cash. He owns shares in a company which have value, but it's not cash, so he doesn't pay any tax on it. He only pays tax if he sells it. That's why it's called a capital gain. So as long as Jeff Bezos holds on to his shares and doesn't sell any, he pays zero tax on that $100 billion. In fact, according to his tax returns, he didn't pay any federal taxes for 4 of the past 6 years. According to reporting by ProPublica and the IRS, Jeff Bezos isn't alone. Between 2010 and 2018, 135 billionaires paid no federal income taxes in at least one of those years. Some billionaires like Jeff Bezos paid no income tax at all, while others like Elon Musk paid a small amount. One of the richest families in America, the Mercers, didn't pay any federal income tax for 8 years straight. So how did they do it? Let's take a closer look at the tax strategies the super wealthy use to keep more of their money. This one is known as the buy, borrow, die strategy. Again, this is legal, but it does raise a few eyebrows. Basically, you buy assets that increase in value. You then borrow money against those assets and use that cash for whatever you want. Then you die, and the assets pass on to your heirs. Since those assets have increased in value, your heirs will have to pay capital gains tax. But that's usually a much smaller bill than what you would have faced if you were to sell the assets yourself. Think of it like this. Let's say you have $100,000 in savings, but you want to buy a $1 million house. You could save up for 10 years to afford the house outright, but that'd be boring. Instead, you decide to buy the house with a mortgage. You take out a $900,000 loan and put $10,000 of your own money down. For the next 30 years, you pay off the loan, raise a family, maybe even throw a few awesome parties. Then one day you die. Your kids inherit the house. Now, if you lived in the U.S., the first $549 million of your estate would be free of federal inheritance tax. After that, they'd owe 40% of any extra money. In this case, that would be $1.95 million. But here's the kicker. Your kids probably won't pay that much because they'll be able to refinance the house in their name. Now, depending on interest rates, inflation, and how much house prices appreciate, the home might be worth over $5 million, so they can easily borrow $5 million against it. With your debt, they can then gift it to charity, gifting the stock to someone else, or use it however they want. This means your estate probably wouldn't owe any extra tax at all, and this is just one way the ultra-rich avoid paying tax. Here are some others. Capital gains tax is usually lower than income tax. Just like our house example, billionaires often use offshore accounts in places like the Cayman Islands, where there's no inheritance tax. Real estate deductions. When you buy a property, you can write off the mortgage interest and property taxes. Depreciation. This is an interesting one. In America, you can deduct $1.5 million from your taxable income every year. By claiming depreciation, your taxable income becomes negative, meaning you owe no taxes, and you can even get a refund. Of course, you can't keep this money forever. Eventually, you have to pay taxes on it. But it does buy you some time. Now, last but certainly not least, we have the power of charity. Say you have $100 million in stocks that have increased 50% in value. You've made $50 million in profit, but you don't want to pay capital gains tax on it, so you set up a foundation and donate the stocks to it. Now you've cut your taxes by up to 30%, depending on the value of the donation. But importantly, you still control the money. Through the foundation, you can spend it however you want. It's not unusual for billionaires to set up complex networks of foundations to funnel money around. This way they can reduce their taxes further. Again, it's legal, but it's making billionaires even richer while everyone else gets poorer. So is it fair? To answer that question, let's do a bit of math. The average American pays between 20 and 40 of their income in taxes. Billionaires, on the other hand, pay between 1 and 3. Sometimes that works out to be nothing. Is this fair? It depends who you ask. Some say it's fine. After all, they're not hiding money under the table. They're playing by the rules. They create jobs and innovate. Others say it's exploitation. They make the rich richer and hurt public services like schools, roads, and hospitals. Whatever your view, these people aren't stupid. They hired some of the best lawyers and accountants in the world. So the next time you see a billionaire doing this, you'll know exactly what's going on. Billionaires also use teams of lawyers, accountants, and advisors to protect their money. Take trust, for example. This is when a third party controls your assets. This protects your wealth in 2 ways. First, your assets are safe because they're held separately from your personal affairs. Second, your beneficiaries won't have to pay as much tax when they inherit your wealth. Loss harvesting. This is when you make investments to offset profits with losses. Then we have municipal bonds. These are loans to state and local governments. You can invest in them and receive tax-free interest. So what do you think? Is this fair? Should the tax system be changed, or is this just smart money management? Let us know in the comments. Back to the main video. So we've covered some ways billionaires avoid paying tax, but now it's time for the truth bomb. Technically, all of this is legal. They're not breaking any laws. They're using legal tax loopholes to minimize their tax burden. And that's allowed. In fact, it's encouraged. But here's the catch. These loopholes weren't created by the billionaires. They were created by lawmakers. Lawmakers who were probably bribed or lobbied by the same billionaires. So who really controls the tax system? Well, that's up for debate. But one thing is clear. The ultra-rich play by very different rules. So there you have it. How billionaires legally avoid paying taxes. Thanks for watching. We hope you learned something new. If you did, show us you liked the video. Give it a thumbs up and subscribe for more insightful business and political content.